What if I told you that one of Europe's most celebrated financial success stories, once hailed as the pride of German innovation, was in fact a house of cards built on deception? That a company once valued at more than 24 billion euros, listed on Germany's prestigious DAX index, and trusted by governments, banks, and investors across the world, had fabricated billions in profits and cash that simply did not exist. This isn't the story of a small fraud hidden in the footnotes of balance sheets. This was a scandal that fooled auditors, regulators, politicians, and even some of the world's largest financial institutions. It's the story of Wirecard, a payment processing company that promised to be the European answer to PayPal, but turned out to be one of the biggest corporate frauds in history. Wirecard's rise was meteoric, its fall was catastrophic, and its legacy remains a dark warning that in the digital age, even the most trusted companies can be nothing more than an illusion. At the turn of the millennium, the world was changing rapidly. The internet was no longer just a novelty. It was becoming the backbone of commerce. Online payments were exploding, and giants like PayPal were reshaping how money moved around the globe. In Germany, Wirecard was founded in 1999 as a modest payment processor, mainly serving online gambling and adult entertainment websites. It was hardly glamorous, but it was profitable. As more transactions moved online, Wirecard positioned itself as the reliable middleman, a company that could process payments across borders, currencies, and industries. By the mid-2000s, under the leadership of CEO Markus Braun, Wirecard reinvented itself as a fintech innovator. It marketed itself as the future of European payments, a proud answer to Silicon Valley. In 2018, Wirecard achieved what many German startups only dreamed of. It replaced Commerzbank on Germany's blue-chip DAX index. Investors celebrated. Politicians hailed it as proof that Germany could produce world-class technology firms. Wirecard's share price soared, and its CEO Markus Braun was feted as a visionary. For years, analysts described the company as unstoppable. But beneath the polished image, cracks were already forming. As Wirecard's valuation grew, skeptics began asking uncomfortable questions. The company claimed to process billions in payments worldwide, yet its financial statements didn't quite make sense. Margins were unusually high, profits suspiciously smooth. Some of the first warning signs came from journalists and short sellers. In 2008, a German investor published a report accusing Wirecard of accounting irregularities. The company fought back aggressively, dismissing the accusations as lies. Regulators sided with Wirecard, and critics were often sued, threatened, or silenced. This became a pattern. Whenever allegations surfaced, Wirecard claimed it was the target of a conspiracy by hedge funds trying to profit from its downfall. German regulators, particularly BaFin, repeatedly defended the company. In fact, at one point, BaFin even banned short selling of Wirecard shares, an extraordinary move that effectively declared Wirecard untouchable. Meanwhile, Wirecard's most vocal critics, investigative journalists at the Financial Times, faced intense backlash. Their reports suggested that Wirecard had inflated profits through fake transactions in Asia. Each time, Wirecard dismissed these reports as baseless attacks. But the evidence was piling up, and the truth was getting harder to bury. Markus Braun, Wirecard's CEO, was central to the company's mythology. An Austrian computer scientist with a distinctive turtleneck wardrobe, often compared to Steve Jobs, Braun projected an aura of quiet genius. He spoke of Wirecard as a global champion of digital payments, promising to revolutionize finance. He was deeply admired in Germany's business circles. Politicians praised him. Investors adored him. He seemed to embody the dream of a European tech giant capable of competing with Silicon Valley. But Braun wasn't the only key figure. Behind the scenes, another man was quietly shaping Wirecard's empire, Jan Marsalek, the company's flamboyant chief operating officer. If Braun was the polished visionary, Marsalek was the shadowy operator. He boasted about secret intelligence contacts, hinted at covert missions in Libya, and cultivated an air of mystery that only added to Wirecard's mystique. Together, Braun and Marsalek made an unlikely duo. One the public face of a European success story, the other a master of intrigue who knew how to operate in the shadows. And together, They built a company that seemed unstoppable. So how did Wirecard fool everyone for so long? At the heart of the scandal was a simple trick: fake profits. Wirecard claimed it had lucrative operations in Asia, especially in countries like the Philippines and Singapore, where local partners supposedly processed transactions on its behalf. These so-called third-party acquirers accounted for a massive portion of Wirecard's reported profits. But in reality, many of these partners barely existed. The revenues were fabricated, the contracts forged, and the cash imaginary. Wirecard told investors it had over 1.9 billion euros sitting safely in trustee accounts in the Philippines. This cash was supposedly the backbone of its balance sheet, proof of its profitability. For years, auditors signed off on these numbers, trusting documents provided by Wirecard. But the money wasn't there. It never was. Wirecard had constructed a vast web of lies, shell companies, forged bank confirmations, fake clients, to trick auditors and investors into believing it was far more successful than it actually was. By inflating revenues and inventing profits, Wirecard sustained the illusion of unstoppable growth. Investors poured in billions, and those who questioned the story were attacked, silenced, or ignored. In 2019, the Financial Times intensified its reporting, publishing detailed investigations into Wirecard's operations in Asia. Whistleblowers provided internal documents that showed systematic fraud. The pressure mounted. Finally, in June 2020, the truth could no longer be hidden. Wirecard's longtime auditor, Ernst & Young, refused to sign off on its accounts. The reason? They could not verify the existence of the 1.9 billion euros in cash Wirecard claimed to hold in Philippine banks. The Philippine banks quickly confirmed that no such money existed. The entire illusion collapsed overnight. Wirecard admitted that the funds were likely fictitious. Its CEO, Markus Braun, resigned and was soon arrested. Jan Marsalek vanished, disappearing into the shadows with rumors that he had fled to Russia under mysterious protection. Within days, Wirecard filed for insolvency. The once proud tech giant of Germany, the company that had promised to reshape finance, was revealed to be a massive fraud. The Wirecard scandal sent shockwaves through Europe and beyond. Investors lost billions. Banks that had financed Wirecard were left with staggering losses. Shareholders who believed they were backing Europe's next PayPal saw their fortunes evaporate. But the scandal also raised deeper questions. How could this have happened in Germany, a nation known for its strict regulations and financial discipline? How could BaFin, the regulator tasked with protecting investors, have defended Wirecard so aggressively while ignoring mounting evidence of fraud? For many Germans, it was a national embarrassment. The Wirecard fiasco exposed regulatory failures at every level. Politicians were forced to explain why they had courted Wirecard as a champion of German tech. Auditors faced scrutiny for years of negligence, and the myth of Wirecard as a shining European success story was shattered forever. Markus Braun was charged with fraud, market manipulation, and embezzlement. He awaits the outcome of his trial. Jan Marsalek remains at large, one of Europe's most wanted fugitives, rumored to be under protection in Russia. The Wirecard case was more than a corporate failure. It was a warning about the dangers of unchecked ambition and blind trust in the age of digital finance. Wirecard wasn't just a fraud, it was a collective delusion. Investors wanted to believe Europe could produce a tech giant. Politicians wanted to believe Germany could lead the digital revolution. Regulators wanted to believe the system was working. And so, everyone ignored the warning signs. The scandal underscored how fragile trust can be in the financial system. Billions can vanish overnight if oversight fails. In a world where money increasingly moves invisibly through networks and servers, accountability is more important than ever. Wirecard showed us that no matter how modern or innovative a company appears, the oldest rule still applies. If something seems too good to be true, it probably is. So what if I told you that behind the glossy press releases, the soaring stock price, and the image of a European tech champion, there was nothing but smoke and mirrors? That the billions Wirecard claimed to hold were nothing more than numbers on a spreadsheet, conjured out of thin air? The Wirecard scandal wasn't just about a company lying to investors. It was about a system that wanted to believe the lie. From regulators to politicians to bankers, too many people ignored the red flags until it was too late. Markus Braun now stands trial for one of the biggest frauds in modern history. Jan Marsalek remains a ghost, vanishing into the shadows with secrets we may never fully uncover. And the investors who believed in Wirecard's dream are left with nothing but the memory of a promise that never existed. Wirecard will be remembered not only as a financial scandal, but as a warning. In the digital age, illusion can be as powerful as truth, and just as dangerous. Because in the end, the greatest fraud wasn't just the missing billions. It was the belief that Europe's financial watchdogs, auditors, and leaders could never be fooled. Wirecard proved they could. If you found this story eye-opening, don't forget to like, share, and subscribe for more deep dives into the scandals, mysteries, and hidden truths shaping our world. Together, we can keep exposing the illusions that others would rather keep hidden.